Hi folks, welcome to Economic Observations. My name is Chris. It is Thursday. It is the 19th of March and welcome to spring tomorrow. Okay folks, today we're going to talk about refinancing, all-time high since 2007, and we're also going to talk about unemployment. Okay, in 2020, we saw more refinances since 2007. The only difference was that this time, only people with a credit score approaching 800 were able to lock into a better rate and pull cash out of their homes. If you had a credit score of say 600 to 700, you paid a higher interest rate because you were more of a risk for the banks. Now, taking cash out of your mortgage is if you owe $100,000, but the house is valued at $200,000, and you took $150,000 out. All-time highs, folks. Cash refis jumped by 42% in 2020. It came to $152.7 billion, meaning 42% of all refinances took equity out of their homes. There is a new tax bill, though, in 2017 that was created that prevents you from writing the interest off on that cash out amount. So if you took $150,000 in the example I gave, only $100,000 of interest you will be able to write off as a mortgage payment, and the other $50,000, whether you paid off credit cards or bought a car or sent your kids to school, is not allowed to be deducted anymore on your taxes since 2017. There are pros and cons with refinancing and with the cash out. So cash out refis let borrowers essentially swap their current mortgage with a fresh one that has a higher balance, and this allows homeowners to pay off the old mortgage and still have cash left over. The median credit score for all new refis last year approached 800, near the top of the scoring range, and that includes refis where the borrower didn't take out cash. Banks are nervous. They do not want to give out mortgages if you have an iffy credit score. This is a telltale sign, folks. But my objective on refinances is don't do it, because in the first 10 years of your mortgage, you are paying essentially 90% interest on your payments, and you don't start paying the capital down or the principal down until about year 10. So why would you want to restart all over and pay all that interest again to save 1%? And also, you're increasing the life of your loan from what you had, which would have been 20 years left over in the example I gave. Now you're going to 30 years all over again. So you have to make sure it is economically sane for you to do something like that. There are some channels that say that money is cheap and you should borrow it. I am on the opposite end of that spectrum, and I say pay it off. You will always need a place to live, and why have that debt hanging over your head for the next 30 years? So if homeowners cashed out $152.7 billion in equity in their homes, the total of refi mortgages was $2.8 trillion. And again, only people with a very good credit score were allowed the low interest rates. Home prices have gone up approximately 13% over the country. A lot of people want to take that equity out of their house. Economists are saying that prices of homes will only continue to rise. I am also on the opposite side of that and think that when all the foreclosures and the moratoriums and the forbearances end, as well as the government handouts with stimulus and unemployment, there are going to be a lot of homes for sale. Which leads me to unemployment. Another 770,000 people filed for unemployment last week. Now folks, you have to understand, unemployment is when people are employed by someone else. It doesn't include a self-employed person, a gig worker, a contract worker, someone who gets a 1099. It is strictly for those that are employed, 770,000, and these are not pandemic-related job losses. If you include the pandemic unemployment assistance, another 300,000 people filed for that. So the number is well over 1 million per week filing for first-time benefits. Also, when you look at the unemployment numbers and the statistics in which they use, where they say it is 6.2% unemployment, they are looking at traditional unemployed people, people who work for someone else, people who work for big companies, people who work for small companies, whatever it is. But it includes employees, not self-employed. So when they say it's 6.2%, they are excluding the 19 million people that are self-employed or contractors or gig workers that are currently on the pandemic unemployment assistance. That is a huge number. So you're looking at the 10 million on unemployment along with the 19 million the pandemic unemployment assistance. Americans extracted more cash from their homes through cash out refinancing in 2020 than in any year since the financial crisis. And you add that to the unemployment numbers and the growing risk of anyone to lose their job, and we are in for some deep trouble. I know there are people out there saying everything's going to be great, the stock market's going to keep going up, and the housing market's going to keep going up, and I'm telling you folks, history repeats itself, and it cannot go up forever. Now I'm going to also put this caveat in: as long as the government keeps printing money as a lifeline, things will hold their own. But it's just kicking the can down the road, and it seems to be a long, long road. And I understand without that safety net, shit will hit the fan really hard. I get that. But what happens on September 4th? When all the unemployment and the PUA and the extensions end? What is going to happen then? Are they going to kick the can further down the road? Remember, folks, we have 30 million people collecting some sort of benefit from the government, whether it's traditional unemployment or this pandemic unemployment assistance. We are in for a rude awakening. What happens, I talked about it in my last video, what happens when the forbearance and the moratoriums end? Think about it, folks. You know, people lost their jobs. It was devastating, and the government was there to catch them. Yeah, it might not be their full salaries, but it's something. What happens when we take that something away? What is America going to look like? History is doomed to repeat itself. Things cannot keep going up, 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 and up. The stock market needs to correct. The housing market's going to correct. The cryptos are going to correct. Some people are riding this high like it's a wave that's never going to crash down. But we know all waves come down. A wave just can't keep going up and up and up. And when it does, it creates a tsunami. And all those people under the wave, well, they're going to get sucked in. And that's what I see happening. I mean, you'll listen to the news, you'll listen to Jerome Powell, you'll listen to all media outlets say how the economy is going to rebound and how things are going to go back on track. Well, everything is pretty much open. And I don't see the unemployment numbers improving any. I don't see the pandemic unemployment assistance improving any. And all those people who are on these PUAs and these unemployments and all this assistance from the government, they're all getting hit with tax bills now. And not only are they getting hit with tax bills, but a lot of self-employed people go to the ACA, which is the Affordable Care Act, to get their health insurance. And it's government subsidized. And they base the amount that the government helps pay your health insurance from your income the year before. So if in 2019, let's say you made $20,000 or $25,000 as a self-employed person, your monthly payments to the ACA in the marketplace would, let's say, be $120 a month. I don't know what it would be, I'm just speculating. So it's $120 a month. But last year in 2020, you had that $600 boost or the $400 boost or the $300 boost, and you had unemployment, and now your income's not $25,000. Your income was $35,000. And the ACA is saying, we have a bill for you. You owe us some money because you made more money than you projected from 2019. So people are getting hit with $3,000 bills in health insurance, as well as owing income tax on the income that they earned on unemployment if they didn't have it withheld. I just don't see how this can end well. You take 25, 28, 30 million, however many it is, off of their lifeline, and what's going to happen? Sure, the unemployment numbers may say that there's only 10 million unemployed, but we know the number is a lot bigger than that. I'm preparing myself, and I hope you are too. Pay down those bills, pay off your house, move in with a friend, save money wherever you can, buy extra food, have some water. You know, things are only getting more expensive right now. Inflation is here. Anyway, folks, when this wave crashes, it's going to be ugly and a lot of people are going to be hurting. I hate to say this, I really do. I'm a happy, upbeat, positive person. But when you look at this with your eyes wide open and try to see the forest through the trees, you can't just look at today. You have to look at the future, and you have to look at the big picture. Think about it. Thanks for watching. Give this video a big thumbs up, subscribe if you'd like, and I look forward to talking to you soon. Again, thank you so much for watching. I appreciate you. Have a good day.